Hey guys, Crypto here with a new YouTube video update. This one is specifically going to be talking about Bitcoin and altcoins. Just as a reminder, guys, before we jump into this, the recording that you're about to see was recorded about 24 hours ago. So obviously some PA has developed or price action has developed since then. Everything in the video is still very relevant, but you'll notice that as I'm going through the video from 24 hours ago, some of the price action has changed a bit. Happy to say that everything that has happened is following exactly one of the scenarios that was outlined in the video. So everything is still totally relevant, but just keep that in mind as you're watching that there is a 24-hour delay between what you're seeing in the video that you're about to see and current price action. Again, with that being said, not much else changes. Before we do jump into the video, I do have an announcement to make for two winners that have won the week 8 and week 9 of my $20,000 giveaway that I've been running for the past couple of months. So we're going to start off by actually announcing those two winners right here, and then we'll go ahead and move on to the charts. So again, we have two winners. Winner for week number 8 should have been announced last week, but I was out of town on vacation, and so I didn't get to it. So winner for week number 8 is the WooFiPro user. Twitter handle is ChefB55. You just won $1,000 and a crypto tag Loki. This user had 3 entries and had signed up through WooX, Mass.Money, and WooFiPro. Congrats on the win. And now moving on to week 9, the week 9 winner is WooX user. You've won $1,000, a crypto tag Loki, a Trezor wallet, and a curved monitor. We have weeks 10, 11, 12, and 13 left in the giveaway. We still have to give away 2 MacBook Pros, 2 MacBook Airs, and thousands of more dollars in cash. So if you haven't yet signed up, there is still time to sign up. You do have to be an active trader for these next 4 weeks to win the prizes. If you are interested in signing up, a link to the sign up post with all the information that you need will be posted in the description of this video. With that being said, guys, let us now jump into our crypto content for today. All right, guys, so in this video, we're going to specifically talk about Bitcoin, and then I'll cover some alts in terms of areas of interest here. This video is being made specifically because yesterday I had a follower ask me about Bitcoin lower timeframe price action. And he asked, is what we are observing right now on Bitcoin and ABC completing? And is this why a pullback is on the horizon and 50 cents pending on CRV? And so I tweeted out if you guys wanted a short video on lower timeframe Bitcoin price action, specifically from an Elliott perspective, because that's what this ABC refers to. So if this tweet gets enough likes, I'll take the time to make a new video about it tomorrow. We got 2.6 thousand likes in 12 hours, guys. Absolutely incredible. So here I am, just woken up and saw this and immediately ordered some coffee and recording this video. So that's what we're going to talk about today, guys, specifically Elliott Wave, because there is a lot of misunderstanding around Elliott Wave and exactly what it is, and it gets a bad rep from people that don't quite understand it, but it's part of like the vital core to a lot of my analysis, although I don't mention it in every video now because it tends to confuse people that aren't familiar with it. It is kind of in the background of almost everything that I do on the higher time frames, on the macro time frames. It's a big part of my higher time frame thesis that I've had since 2018. And the lower time frames, it's how I oftentimes identify potential trade setups that are often some of the best entries that we get in these markets from a trading perspective. And so I like to sometimes in my videos, I'll throw in little tidbits when I'm talking about the price action and kind of break down how the reality of Elliott Wave is really that it's just an analysis of market structure from different time frames. And I'll kind of break that down and talk about how, the core premise is that we have a series of higher highs and higher lows, which is the basis of what market structure is built on: higher lows, higher highs, lower highs. And then I talk about how that kind of falls into Elliott Wave. It's the same thing. It's just different nomenclature that tends to confuse people. But in this video specifically, we're going to talk a little bit more about Elliott Wave specifically in the context of corrective moves, right? And then towards the end of the video, after we talk about the slower time frame price action, I'll then go talk about some altcoins, because I do think that this correction that we're seeing now is going to be the last big chance to load up on your favorite altcoin before we get massive continuation to the upside in a big way. And I talked about this in my last YouTube video, so we won't spend too much time on the macro. Okay, just know that if I could sum it up very, very simply, there's a very high likelihood that our low here at 74K was our bottom for this larger correction, and that the move up that has begun now is ultimately the move that'll take us to 150K plus in the coming months. We have a local top here at 112K, and we're seeing a small correction of the move that began at 74K. that correction can technically come down even lower than we have already come down. It hit 100.4K. We could go below 100K. We could go below 90K even. We could go below 80K even, although that's quite unlikely to happen if these lows are going to hold. But point is that this correction can go deeper without affecting this higher time frame structure as long as 74K isn't breached. You can refer back to my last YouTube video if you want more context on that, on the higher time frames, but today we're going to focus on these lower time frames. So let's go ahead and talk about lower time frame price action on Bitcoin here today. So we have, off of these lows here at 74K, what we like to call an impulsive move, a 5-wave structure, or a series of higher highs and higher lows. And again, how we establish that is we have a key low here, we have a high here, then we have a higher low, higher high, higher low, higher high. That then gives us a series of higher lows and higher highs, which is a 5-wave move or a lower time frame uptrend. That uptrend began at 74K, which means that this is our level of invalidation for this uptrend. And as long as we don't move below 74.6K, whatever low that we put in here after this correction completes, whether that be the low we put in here, or maybe we go lower in the coming days when we put in another low here, whatever low that is going to be essentially, on the higher time frames, the first higher low of a much larger structure in which we put in a low here, a high here, a higher low somewhere here, a higher high, a higher low, and a higher high. And that in and of itself gives us another 1, 2, 3, 4, 5-wave structure, or another uptrend. Again, exactly what we have here, but on a higher time frame. So again, Elliott wave is just the analysis of uptrends and downtrends and the corrections that happen in between on various time frames, right? We have a lower time frame uptrend here, and that is probably part of a larger time frame uptrend, which will form after we complete this correction and make our first higher low before making another higher high, which is another wave to the upside, another higher low, and another higher high. And again, ultimately, this should take us to 150K plus, and that's not going to be the end because, as I've talked about in the last YouTube video, structurally, we have more than just one more 5-wave segment to the upside left. We should get at least 2 major 5-wave segments to the upside. Now, what I just described to you was these impulsive or 5-wave moves. The other part of Elliott wave, or the other aspect of this, is that we have corrective moves or corrections that occur after we complete 5 waves on various time frames, right? So going off of our low here at 58K, we had 1, 2, 3, 4, 5, a 5-wave move completed. Then we got a correction, right? And that correction, as you can see, went down to 74K, didn't move below the base of this level at 58K, which means that this was just a higher low. And then what followed was new all-time highs. So the same applies here with this little structure. We have a 5-wave move. The correction can go lower if it wants. It just shouldn't go below 74K. And as long as we don't break 74K, what should follow is new all-time highs and another 5-wave move to the upside. Now, we're going to talk here about the corrective structures, right? Because the impulsive structures are the easiest to identify because you have a 5-wave move to the upside, a trending move with shallow pullbacks in between. And what follows is a correction. Now, these corrections are a little bit more complicated because they can take a lot of shapes and forms. And in Elliott wave, as someone who's new to it, you'll start learning about different shapes and forms that these corrections can take. And you'll try to label and kind of dissect and break them down to identify each segment of the correction, right? And so when we do that, we label them the same way we label this a 1, 2, 3, 4, 5-wave move. We label corrections instead of with numbers, we label them with letters. So you have heard of ABC, which is what was referred to in that tweet that I'm making this video because of. He referred to it as an ABC. You have WXY, you have WXYXC. Now, these are all basically different ways of identifying or naming, kind of putting a name to the chop that we have here in a correction. We give them names like ABC or WXY to kind of infer different things about the nature of the correction. But at the end of the day, all this is a way to identify the structure of this correction the same way we identify the impulsive structure of the move up. And the goal is to hopefully be able to identify when this correction is coming to an end so that we can then catch the next leg up. So that's all we're doing when we try and identify or label these corrective moves. Now, again, a lot of this chop, at the end of the day, it's ranging price action. So if you're not an Elliott wave analyst or you don't practice Elliott wave, and maybe you're looking at this from a typical price action trading perspective, you'll call these movements different things, right? Now, from a typical price action perspective, if you're not an Elliott wave analyst, you might view this as a local range. We established a local high, we established a local low, we saw a deviation above the highs of the range, we saw a deviation below the lows of the range, and now we're back above the highs of the range. And essentially we're just chopping around here. And we can go to the higher time frames, and you may identify the range, in a different way once these higher time frames have some PA that is developed. So you can look at this on the weekly, and you can say maybe this candle here is like a weekly range. There's different ways to identify ranges, and there's no necessarily right or wrong way, but there's probably some methods that tend to yield more accurate results in terms of price action. But I'm just trying to show you guys that there's a number of ways that you can identify a range. And essentially what you have here is deviations above and below the range, which is normal, which is chop or consolidation before continuation of this lower time frame trend that we've established. And the continuation of this lower time frame trend, as it continues, establishes a higher time frame trend. So we're looking at kind of a trend evolving from lower time frames into higher time frames into the next major move to the upside. And we're seeing the beginnings of it, the basis of this much larger move to the upside, kind of how we were able to identify, of course, back here at 10 or 15K, the start of this 5-wave move to the upside, the start of this 5-wave move to the upside that we identified. You can see the lows were never breached here. So the start of these little moves ends up becoming the base of a much larger move. And of course, a very clean 5-wave move off the lows here at 38K, where we were once again bullish because we were able to identify these impulsive moves to the upside. So if we can identify the small moves in the lower time frames, then we can hopefully catch a ride for the big move on the higher time frames. And that's the whole point of us paying attention to lower time frame price action and trying to make sense of what we're seeing here. So in any case, the way that we label these corrective moves is each segment, in the same way that we have a 1, 2, 3, 4, 5, each segment of this corrective move is given a letter. And the idea is that impulsive moves happen in waves of 5, corrective moves tend to happen in waves of 3. And why is it waves of 3? Because if it was a 5-wave move, then it would be impulsive, it would be trending. The lack of a failure to make higher highs and higher lows is what makes something a corrective move, okay? At the very core of it, the idea is that if the move is trending, it should put in higher highs or higher lows in an uptrend, or lower highs and lower lows in a downtrend. And if a move is failing to do that by putting in a low, a high, and then making a lower low, and then again a higher high over this local high, if it's just chopping about and not putting in a series of repeated higher highs or higher lows in an uptrend, or a series of repeated lower highs and lower lows in a downtrend, then it's not trending. And a non-trending move is a corrective move at the very core of it, right? So Elliott wave talks about impulsive moves, which are trending moves, and corrective moves, which are ranging moves. And that's all there is. That's the core of Elliott wave. And you're trying to identify one versus the other to identify when the next move to the upside is a real move and when it may just be a fake out or corrective move that ultimately fails, right? So in this case, you can see that we've been putting in consecutive higher highs and higher lows. We put in and again, another way to identify these impulsive moves is that they tend to be very straight and strong with minimal overlap in between the move. That's what shows us that there's momentum or strength behind the move. The more overlap you start to get, the less likely it is the move's impulsive. And more often than not, and ideally, these moves will subdivide into 5-wave moves of their own. And that's how you can kind of confirm or validate an impulse. There's other ways to do it in more depth, but we won't go into that today. There's some advanced methods that you can use to help add confidence to an idea that the move is impulsive or not. But again, we won't go into that today. But you can see that the move off of this low, we moved up, had this choppy overlap, moved up, came back down, went up. This is a corrective move. And this is kind of why the breakout to the upside, we could have anticipated that it may have failed because we didn't get a strong move that moved sideways and then moved up again. We got up, down, up, down, up, down, up. Right? Very choppy, grindy, tells us that there isn't momentum or strength behind this move. It's kind of just being forced to the upside. In this case, to take liquidity, it seems above these highs before moving all the way back down to these lows, right? And we previously identified that these local levels that have a lot of relatively even or equal bottoms are often areas where liquidity is resting. And so price tends to find those liquidity pockets and move to them to essentially generate liquidity. And that's exactly what we saw here. We moved above here. We didn't have an impulsive move, so it wasn't one that was going to start the next true breakout. So we chopped about, and then we ended up falling back inside the range. And where did we go? To the bottom of the range, taking all of these built up lows that we previously had here with this little wick. And then we saw a reversal. So this was just a liquidity grab inside of a ranging corrective move. And then we bounced to the upside. So then the question is, okay, we bounced to the upside. We took liquidity. Are we ready to go? Are we ready to make the next impulsive move to the upside? And once again, you can see here, we got a 3-wave move. 1, 2, 3, and then price fully retraced back to the middle of this. Typically, in an impulsive move, there's certain rules that we have to follow in it for something to be impulsive. And one of those that we often say is that wave 4, or the small corrective move in this structure, the fourth wave, should not enter wave 1 territory. So if this was an impulsive move, we have wave 1 here, we have relatively sideways wave 2, we have a wave 3. The wave 4, meaning the smaller correction from here, should not go back to as low as 105.6 or even really hit this subwave 2 here. If it does, that tells us that the momentum isn't there. If this was an impulse, we get another, we have a low, we have a high, we have a higher low, higher high. This would be a higher low and another higher high. And this would give us 5 waves, and this would be a series of higher highs and higher lows, and that would be considered an impulsive move. But what did we do? We made a high, we made a low, we made a higher high, and then this higher low has entered the territory of this move here, which is a lot of overlap. And when we get that kind of overlap, it invalidates the impulse, because in a true impulsive move where there's really momentum behind this, we should not retrace so deeply, right? This tells us that there isn't really momentum behind this move to the upside. When you retrace this deeply on the move where it's entering the territory of this wave here, that invalidates the structure as an impulse. So now we know, okay, this move is also corrective, just like this move to the upside was. And what does that tell us? That tells us that we could certainly come back down inside this range, that we're not done with this correction to the downside yet, which it's really so far been a sideways correction. It hasn't really been to the downside, but the correction isn't complete. And so we're not quite ready yet to take off, right? And now remember what we said earlier, that if the correction isn't complete, it doesn't mean that if we break this low here at 100K, that all of a sudden things have changed and it's terrible. No, again, since we've completed this impulse, the correction that follows, which is what we're in now, can go down to 97K. It can go down to 91K. It can even go down to 85K. It doesn't make a difference as long as it's above the origin here, right? So the correction isn't complete. That means that we could come down further now. Maybe we put in a higher low here and we keep chopping and then we rip up. Maybe we make a lower low below 100K. Maybe we go for the liquidity resting here, the next set of liquidity here at 92K. Those are all valid possibilities. But we're going to talk about what I think are the most likely possibilities, areas that I would focus on now with this developing price action. And we're going to talk about some alts and how they kind of play into this, because a lot of alts are approaching areas that I'm very interested in for potential trades. And if it wasn't for trades, it would be for spot buys, because I think we're at that point now where you're looking to allocate wherever you can, because we know that, again, after we've completed this impulsive move, we know that however deep this correction goes and wherever it goes, what comes next is going to be another rip to the upside on Bitcoin. If the bull market on Bitcoin isn't over and the top isn't in, which at this point, I don't think many believe that it is. And I've been saying that since we were down at 75K before this rally. But if the top isn't in and Bitcoin's headed much higher to 150K or 200K plus, alts are going to follow. A lot of people on Twitter lately have this idea that alts will not follow, that it's a Bitcoin only cycle. That's probably a topic for another video, but I've talked about why this time is not different. Alts are going to follow Bitcoin up. It's a matter of time, and money will rotate into altcoins. This time is not different. You hear the same thing in every cycle. Back in 2017, when Bitcoin was ripping, very few people expected alts to follow in the way that they did, but alts had a massive run, and those who position themselves in preparation for that made tons of money. So again, the same thing is going to happen here. There's absolutely no doubt in my mind. But again, topic for another video. So let's go ahead and talk about this lower time frame correction and areas of interest on the downside and how I would label this from an Elliott wave perspective. Because again, this video, the point of it is to kind of give you guys a little bit more insight into Elliott wave. So let's go ahead and talk about this, right? We have a 5-wave move that completed here. Okay. So just for illustration purposes, we will mark off this here as the end of the 5-wave move. Okay. And I'm going to go ahead and put this down here as the beginning of the 5-wave move, okay? So the blue circles here identify our impulse, 1, 2, 3, 4, 5, okay? Now we'll talk about the corrective move. We know that the corrective move starts from here. So we have some chop here, we have a move up, we have a move down. Now we have another move up. Again, 3-legged structures. So the way that you would typically identify this, or typically label it, I should say, is someone asked if this was an ABC, okay? ABC is essentially, in a corrective nature, is essentially a correction where you get a 3-legged move down in a zigzag shape, okay? With impulsive moves here and here, okay? And so again, in a traditional impulse, you're looking for 5-wave moves, right? If we're impulsing to the downside, let's just say, for example's sake, we're in a downtrend, okay? In a downtrend, you have 1, 2, 3, 4, 5, okay? That's 1, 2, 3, 4, 5. That is a downtrend. And that is a clean 5-wave move. This would be labeled a 1, 2, 3, 4, 5 to the downside, okay? Impulse doesn't necessarily mean impulse up. It could also be impulse down. It just means a trending move, whether that be up or down. So this is an impulsive move. Now, in a situation where you get 3 legs down, and then this 4th wave, instead of being sideways and getting another impulse down, if this 4th wave actually goes up like this, right? and you never get this second green part here. You just get something like this. This is what we call an ABC. So an ABC is basically 3 legs, meaning an impulse, sideways impulse, that fails to get a fourth and a fifth. If that fails to happen and we retrace that move, that's an ABC, okay? So the characteristic of an ABC is 1, sideways, 1, 2, 3. That's an ABC, okay? You can see from here that this isn't quite an ABC because we have a lot of chop here. We have a move up. We have a 1, 2, 3, 4, 5, but the 1, 2, 3, 4, 5 actually overlaps here. You can see that this correction moves into this territory. That invalidates this as an impulsive move. And we know it's corrective now, right? It's very clear it's corrective. So that confirms exactly what I was trying to say. When you get a move like this, where this part overlaps with this part, right? If this was a 1, 2, 3, 4, 5, the 4 would overlap with the 1. That invalidates it as an impulse. That tells us it's corrective. And we know this is corrective because we're impulsing up. We're not impulsing down right now. This move was almost fully retraced, as we can see now. So this isn't a move with momentum. This is a corrective move to the downside, a choppy corrective move to the downside. That's not impulsive. That's not trending yet. And as a result, after we took the lows here at the range lows, we saw a nice, relatively strong move against the structure here, right? That just further confirms that this isn't impulsive. But that's why we have these rules about how deep these retracements can go in situations to help identify. So no, this is not an ABC, right? Because an ABC is just a very clean 1, 2, 3. So an ABC would look like, if we topped here, it would be like this. That would be an ABC, a 1, 2, 3. Okay, simple, easy, right? So what we call this, if it's not an ABC is considered a simple correction. We call it simple because it's just 1, 2, 3, and it's an impulse, sideways impulse that failed to make a fifth wave. That's simple, right? If you don't have a simple correction, you have what we call a complex correction. And a complex correction just means it's not simple. It's complex. There's a lot of chop. There's a lot of ranging. There's a lot of overlap. And so what we call this in terms of a complex structure, again, a complex structure is a 3-wave move. But in the case of an ABC where you get 1, 2, 3 going down, a complex structure, we get primarily sideways price action. And with a complex structure, we label that as a WXY, right? So now instead of using ABC, we use WXY to denote what? That this is not a simple correction, it's a complex correction. And you can see here that a complex correction, while an ABC primarily moves against the direction of the trend, a complex correction is primarily more sideways, okay? And so complex correction looks like this. It can look like this, which is what we call a running flat. We can also have a complex correction that looks like this, which is what we call an expanded flat. And the difference between these two is that in a running flat, as you can see, the X wave or this middle wave goes above the start of the correction to the downside, and then the Y wave fails to go below the end of the correction on the downside, and you get a very, very sideways move. In an expanded flat, you get this, which is where the X wave does once again go above the start, just like the running flat, but the move down, the Y move actually clears these lows, where in the running flat it fails to, in the expanded flat it clears the low, okay? So these are two different variations of what we call complex corrections, okay? And so what we have here, as you can see, if this was the end of the fifth wave, either here or here, you have a move down, and you have a move up that clears the highs, that's our X wave, and then we have a move down that clears the lows. So this fits the structure of what we'd call a expanded flat, okay? So we'd label it a WXY. And so that's your first lesson on corrective moves and why this isn't an ABC. It's technically a WXY, okay? Now, what do we have after that? We have another 3-leg move to the upside. And right now we're kind of retesting these local range highs, okay? And there's a few different ways that we can go from here, a few different ways that this can play out. But we have here a completed corrective structure, a 3-legged structure that took the highs of the start of the correction, that took the lows of the correction, and that completed 3 waves, right? Sideways. So this is a completed structure. Now, in corrective structures, what we can have is, as you can see here, actually, this is a great example, this impulse off of 58K, the 1, 2, 3, 4, 5, what followed was a very long, drawn-out corrective structure, right? You can see we had a move down after we completed it. We took the highs, then we took the lows, so we got another WXY right here. But then what happened after was we made another high sideways. We made another local high. We took the lows of that. We went up. This was another WXY to the upside, another corrective move. Then we came down. Then we chopped about and went sideways and down for a very long time. And so in the idea of corrective moves, these corrective structures that we see here that we can identify can get chained together essentially to make larger, more drawn out corrections, right? So these can continue to go on. You can have a WXY, and then you could have another WXY, and then another WXY, and basically that makes a long, drawn out correction, okay? In between these WXYs, we have what we call X waves, which are kind of like connecting waves that tie all these together. But I don't want you guys to get caught up in this lower time frame chop, because it's very hard to correctly label and identify every single move in a corrective structure. And that really shouldn't be your goal either. We're just trying to be able to identify when the choppy corrective price action ends and when the impulsive price action begins. Everything in between doesn't really matter to us. It doesn't matter to us whether this is a WXY, whether it's an ABC, whether it's a WXYXZ, whether it's some other form of corrective structure. It doesn't really matter to us. What matters is, when does the chop end, right? When does it end? And when does impulsive price action begin? I don't try and emphasize and try and highlight and identify corrective structures too frequently, because I don't want you guys to get caught up in that. This is, again, more for educational purposes, so you kind of understand what people are doing when they're using WXYs and what a complex correction is and all these things. And again, the other issue with Elliott Wave is that a lot of people tend to pick this stuff up, don't have much experience with it, are reading the textbooks, try and implement it on their charts, and they're doing it the wrong way, or there are little nuances and subtleties that they're not picking up on because they don't have that experience. And so they're labeling things in a way that really is not correct. And so you're going to see a lot of this stuff on the internet, and a lot of times it's just not accurate, which is why you really have to filter out those that you follow when you're talking about Elliott Wave. It's a little bit more advanced. It is a little bit subjective. You really need to have experience with using it. And I've been using it for 7+ years now. And then those who follow me know that it's one of the core principles that backs a lot of my content. So with that being said, what I like to do is I like to combine the ideas of Elliott Wave, the ideas of having a corrective structure, with supply and demand, with price action concepts, to kind of better help identify where this correction may end without needing to necessarily go into the nitty gritty about, what is this structure? Is it a running flat, expanded flat? Is it a expanded flat connected to a running flat, or et cetera, et cetera? So the way that I approach this myself is I understand we're in a corrective structure here. I understand that this move up is corrective. This tells me that I can look for areas of interest on the downside. And if I can identify a more complex structure, then I can potentially be ahead of the game when the next impulse starts and jump onto it quickly and aggressively as soon as it presents itself. And that's kind of my approach to the markets most of the time when I'm looking to trade. So let's talk about lower time frame targets to the downside using both Elliott Wave and price action concepts to kind of help identify where we may bounce from if we're still correcting here, and how low we may go, or areas of interest to focus on. So in my prior YouTube video, I did talk about this being an area of interest on the downside, right? If this level has been lost, if these lows are taken, then the next area of interest is the green zone here. I mentioned that in my last YouTube video. You can see that low was taken, but it's just a wick and then we pushed up, meaning we're seeing some buyers step in where we'd expect them to step in, and enough so that we avoided, for now, a trip down to the next major area of interest. This is the next, what we consider major area of demand here at 93 to 98K. This is the next major area of interest. So you can see, and some may recall from my last YouTube video, I had a little level here that I marked off where I said we'll see our first bounce. We came down, we pushed into it, we saw a bounce. It was able to retest the range highs, but then we came back down to it and we broke down, okay? So this was the first area of interest that we lost. We came down, we wicked these lows, took all the liquidity built up here, and we saw a nice reaction. That means buyers stepped in. So far, we've avoided the next area of interest, okay? Now, what can happen here, the way that I'm looking at this is I think we have a corrective structure here that completed here, okay? And then we have what we like to call an X wave, or a failed impulse, because you can see we only got 3 waves. We failed to get 5. So this was a failed attempt to break out. We completed a correction. We failed to break out. That means the correction continues. And so what we're looking for now is another 3-legged move to the downside if this one is complete, okay? We could also do something like this, which I'm not ruling out yet. Again, we have these highs here. We took the lows. We took these highs. We saw a bounce. We should have some level, if there's a little level of support here. This is kind of like an interim area of support, and I call it that. Why? Because you can see here that this is the move that started from this local high that led to a flush down to take this liquidity and the SFP, or you can say the swing failure pattern, meaning a wick that took the lows but then closed above. That we call that an SFP, when you have a move that takes a key swing low but then closes above, like we saw here. So this is an SFP. So we have the move that began the drop, that took liquidity and led to this SFP, and then we saw a reversal. So this entire zone is technically an area of demand, okay? An area of demand or an area of support. So above this one, we've now formed a new area of demand or a new area of support that we may bounce off of. So because of that, I can see a potential where we come down into here, we find some support, and we go for these highs one more time, okay? And in that case, we make another new all-time high over here, okay? But once this area of support has been tested, any revisits after the first test increase the odds that the area is lost. In the same way that we had this area of support here that I pointed out in my last YouTube video, you can see the first time we tested it, we bounced. But when we tested it again, we broke through. Why? Because, well, the buyers that were looking to buy here bought, we moved up, sellers came in, and there was no more buyers left here because they already bought on the first test. So in the same way, if we do come to test screen and we do see reversal to the upside and we get back above these highs to take liquidity again, because you know that anyone who's short here has likely placed stop losses above these local highs. If we get back above them and we fail once again to break out, when we come back down, then the subsequent test of the zone likely gets lost. We likely break through it. And then we look at the next area of interest. And so what we have developing here then, as you can see, is a three-legged structure, which we previously talked about, right? And we call that again a WXY. We'll mark it off, WXY. What followed then is another corrective structure to the upside. If we find support here, that's good. That doesn't magically turn this move impulsive just because we're climbing higher. Again, we have three legs, we have overlap. This move, even if it continues to new all-time highs here, is not technically impulsive. It's a corrective move, which tells us that even if we make new highs here, there's a good chance that we're going to reject and come back down, right? And so in that case, then what do we have here? We have another three-legged move, another WXY, okay? If we get this sort of structure, it looks like an ABC, and this is where the nuance comes in, and I don't want to get you guys too confused about this. It looks like an ABC, but because it's a three-legged structure, a choppy move, and then another three-legged structure up, it doesn't technically count as an ABC, because remember, an ABC by its very definition is a 1, 2, 3, 4, 5 wave move, a choppy 3-wave move, and then a 1, 2, 3, 4, 5 wave move. It's an impulse, sideways impulse. This isn't an impulse. We already identified that this is not an impulse. It's a corrective move. It's a three-legged move. And so if we get a corrective move, a corrective move, a corrective move, where we like to call it a 3-3-3, that's not a 5-3-5. That's not an impulse, sideways impulse. This is an ABC. It's simple. This would be considered another WXY or a complex correction that looks like an ABC. Again, not too important. The key that you want to focus on here is corrective moves, even if they make higher lows, will typically result in more corrective moves, not impulsive ones. We want impulsive moves to identify the start of the next leg. So if we come down in here and we find support in the green zone, which is a logical area to find support, and then if we go and make new all-time highs again in a corrective move, so in like a choppy three-legged move like we got here, then there's decent chance that we're once again going to reject. And that could lead to another sell-off. And this sell-off, if it tests this green zone again, odds are higher that it's going to break it this time. And that brings us to the next area of interest. Okay, so this is how I approach the markets in terms of corrective moves and in terms of expectations. And so anytime I see a lack of impulsivity over here and I see us finding support here and moving up again, many people typically, every time that we break highs, they're expecting continuation. They're expecting a bullish breakout. They're expecting the start of the next impulse. And this is where Elliott Wave can give us an edge, because we know that if the move to the highs is corrective and not impulsive, like it was here, then odds are it's going to fail like it did here. And so in this case, we are sometimes the ones that are calling for potential deviation or a rejection of the highs, and many are calling for breakout every single time we break the highs. And we don't always break out every time we break the highs. So it's important to be able to distinguish these things, and that can sometimes give us an edge. In any case, what we have here is a WXY. If we get a move like this, it's another WXY, and then we'd be looking for another move down, okay? And ultimately, guys, this would then be a potential liquidity hunt below these lows into this area of demand. And then at that point, we'd be looking for a reversal off of this low, and we'd be looking for, again, an impulsive move off of this low. So if we get a little 5-way move here, strong move, then we can look for something like this, okay? And what you see here then is that in the grand scheme of things, despite this choppiness and these rejections to the upside and these moves down, all we did here was consolidate and chop around before the next impulse. And so that's why I also say that this is important for those that are actively trading. If you are a spot holder or a spot buyer and you're not an active trader, this is mainly for educational purposes. You're not going to be attempting to trade this, and most shouldn't if they're not actively trading, because this is noise before the next big move. All you're focused on is where can I look to buy dips if I'm looking to buy. And in this case for Bitcoin, this is the first main area where you look to buy. But in alts, the reason that I focus on Bitcoin here is because it all pertains to alts. I'm not interested in buying Bitcoin. I'm interested in buying alts, but understanding where we may go or how Bitcoin may move will give us ideas and hints and tips on where it makes sense to buy alts. So this is one scenario that could play out here, okay? Now, if this green zone doesn't offer support, let's look at an alternate scenario. So in this alternate scenario, we don't find support in the green zone, okay? And then this was our local top, and we melt through the green zone, okay? In that scenario, what comes into play, obviously, this area here between 93 to 98K. So at this point, this is the next area where it makes sense to look for potential reversal. Again, we have liquidity resting below, so it's possible that this area gets lost. And again, it doesn't change anything on the higher time frames if it does get lost, okay? If it does get lost, then nothing changes. But what we want to look for here is we want to see if buyers step in, okay? Because we have liquidity underneath all these areas of demand, it's not ideal to blindly bid these levels necessarily. What I'll typically do is I'll look for some sort of a reaction off of this zone. I want to see buyers step in, and then I will look for absorption to happen on this move down. And that would give us, if you guys follow me, you know this would give us what? A triple tap, which is a basing structure, or kind of like a base to be established that shows demand before the next leg up. This would be then a long that I would take with a stop loss below these lows, right? For example, we'll have to wait to see how price action develops, but that's how we kind of wait for price action to hit certain levels at times when potential invalidation on the higher time frames is so significantly far below us. This isn't a trade that you'd be willing to take on the high time frames possible. Well, you could take it on the high time frames, but the risk reward from 100K with the stop loss of 75K isn't great. So you're looking for lower price action develop that gives you a tighter risk reward for an entry. And so then you're not blindly bidding these levels, you're waiting for reactions to see if we can develop some better lower time frame structure. But this is another example of how this can play out. If we don't find support here and we melt through, then we look for a bounce here, and then we look for some sort of a higher low and absorption before potentially, again, the 5-wave move that we are waiting for, okay? So this is another alternative option here, and we just have to wait to see how PA develops. Either we take these highs again if we find support here, or we fail to find support here and we go down to the next area of interest. I don't know what's going to play out. I cannot see the future. I do not have a crystal ball. I'm not claiming to tell you guys exactly what path lower time frame price action is going to take. And again, if I wanted to avoid the nitty gritty and the messy stuff, I could simply tell you that we put in a low here, we put in a high here, we're going to put in a low here, and we're going to make new all-time highs. And I can give you no other context or no other information about the lower time frame price action. I can not explain any of this to you and simply say that, and I will be right, most likely, because again, irrespective of what happens here, we're probably going to put in some sort of a low somewhere between, again, 75K and 100K and go to 150K plus after. So it's very easy on the higher time frames to make a statement and be right. By choosing to go into lower time frames, I'm opening myself up to getting things wrong, and that's okay. So the reason I do this again is because I'm an active trader. So I like to establish positions on lower time frames. That gives us better risk to reward oftentimes and allows us to catch a move before it really begins. So I'm not claiming to know exactly what direction this lower time frame PA is going to take, and really it doesn't matter to me, right? Depending on where we go, whether we take the highs first or whether we come down to here instead, either way, it should hopefully set us up for a proper entry down the road. This is another scenario that we could take, and this again, from an Elliott perspective, we would have a WXY three-legged move. We'd have a three-legged move up, which is we consider an X wave or a connecting wave, and then another sort of three-legged move or corrective move, complex corrective move down. And this then would then be a WXY here, but again, this becomes a larger or a higher degree W, meaning a structure of 3, an X wave, and then another structure of 3. That's a larger WXY of a what we call a higher degree, okay? So I hope this is making sense. In the same way that an impulse is subdivided in 5 waves and each of the smaller impulses ideally subdivides into 5 waves themselves, in the same way in a corrective move, you can have a smaller degree correction, a smaller degree WXY within a larger degree WXY. And that just means a three-legged move, and then another three-legged move. And what does that mean? That means a bunch of chop and ranging price action here before the next leg up, right? So again, the idea of needing to label each and every subwave within the larger corrective structure is not very important. We're not trying to do that. We're just trying to identify when moves up are not really impulsive, and that tells us that the correction will continue in one way, shape, or form. And if we can identify the end of this corrective structure, then we can ideally position ourselves for the next impulse. Now, in the grand scheme of things, we get a WXY here, we get a little three-legged WXY here, we get another WXY down, we get a bunch of corrective structures. What does this look like in the grand scheme of things? It looks like we can call it a flag, you can call it a channel, a corrective channel. And in the grand scheme of things, all this does is it sets us up for another impulse whenever this ends, okay? 1, 2, 3, 4, 5, okay? And then what follows that impulse is, again, another channel of some sort of a combination of W, X, Y, X, Z, or some sort of a corrective structure. Again, the way that we label it is only important if you're trying to label it accurately in terms of, you know, the nomenclature and stuff in that sense, but for educational purposes more so than for actually trading. But you label that however you want to label it, and then what happens after that? Another 1, 2, 3, 4, 5, okay? Now we have a completed 5-wave move off of these lows of a large degree, okay? So again, this is Elliott wave. As you can see here, it's just a study of trends in different time frames and putting them all together and making sense of the lower time frame price action in context of the higher time frame price action. That's all it is. So it's not some magical lines that people often don't understand and think that we're just making stuff up. And this is all it is. It's the same thing that other analysts are doing in terms of market structure. We just have a different way of naming it and viewing it that makes sense to us, and that helps us determine when a move is significant, when a move is insignificant, when a move is to be bought, and when a move is to be sold. So that's all we're doing here, okay? Traditional metrics, you count this as like a move up and then a flag or a channel, which is bullish. And by traditional classical chart metrics, this would be a bull flag. And for us, it's an impulse followed by a correction. For classical chartists, it's a move up followed by a bull flag. It's all the same stuff, guys. And it's just different ways of calling it. It's like speaking two different languages, but saying the same thing. And people get caught up in that, the fact that one person is speaking one language, one person is speaking another, when the translation is exactly the same. And that happens with Elliott Wave a lot because people don't understand the language, and they don't understand that we're saying the exact same thing as they are. We're just using a different language. So I hope that adds some clarity to Elliott Wave and to this lower time frame price action and how we approach it and how we analyze it and what we're looking for based on the current price action and based on what I'm seeing on altcoins, which I will explain here shortly on these altcoins. A lot of them are in a very similar position. I do think that Bitcoin is going to see a bit lower before this correction is over. I don't know if we're going to take these highs first or not, but ultimately I think that these lows have a decent chance of being taken. There's one scenario in which these lows aren't taken, and that is that whether we take highs first or not doesn't matter, but we could be forming a triangular structure here. And the triangular structure is also a corrective structure, just as the sideways corrections that I showed you earlier were. In Elliott Wave terms, we call it a corrective move, a triangle, and it would be part of a larger WXY XZ, the Z being the triangle. Triangle is in and of itself a structure like a flat correction, like an expanded or a running flat. A triangle itself is a full structure. So it could oftentimes, it comes at the end of a complex correction because it's a tight consolidation and reduction of volatility before volatility expansion. So it's just another way of talking about a corrective structure. But in the most bullish scenario, the green zone that we talked about earlier, that we created by the move down that took liquidity below this low, this green zone would hold and we'd form a tightening consolidation and then rip to the upside in the impulse. This would be the most bullish scenario, right? So in this scenario, Bitcoin basically really does just go sideways here. And in this case, I think altcoins, a lot of the altcoins that I'm looking at kind of have like one little leg down left, right? One little leg down left to hit the ideal buy zones across the board on a number of alts that I'm looking at. And that's why I think that Bitcoin could make one more lower low, okay, potentially into the zone here, or in the most bullish case, just go sideways while alts bleed a little bit, okay? Or even go sideways and then maybe Bitcoin rips and alts initially take one little dip down, something like that. But what I'm seeing on alts across the board is one small little lower low missing for them to line up perfectly with my expectations on the market as a whole. So I think ideally that means Bitcoin makes one more lower low here below 100K, ideally into 93 to 97K before a full-on reversal. Or maybe we come down and wick these lows and make that triple tap before a full-on reversal. But either way, because of what I'm seeing on altcoins, I think that we could go a little bit lower here in Bitcoin and it's not a cause for concern. Because again, most altcoins look the same right now with one more kind of marginal lower low being ideal for a downside target. Now let's talk about those altcoins. I'm going to cover a number of them that look like they're missing one more marginal lower low, and I'll explain exactly why on each of their charts. Let's talk about CRV first, now that we have that context covered. Guys, before we jump into the altcoin section of this video, quick 20-second shout out to my partners over at WooX and WooFiPro that make this type of content possible. As I've stated before, higher volume traders will want to check out WooX, and those looking to keep custody over their assets and or lower volume traders, I do recommend checking out WooFiPro. If you are interested in supporting me, links to both of these exchanges will be in the video description. And without further ado, guys, let's now jump into the altcoin portion of the video. So here's CRV, and this squiggle that you're seeing here is from either my last YouTube video or the one prior to that, okay? And the point that was being made here for a while now is that a retest of 50 to 55 cents is very healthy and is probably going to be your last chance to buy CRV at a discount before we see new all-time highs, essentially, okay? And again, this assumes that we're right about Bitcoin, about the low being in at 74K. It assumes that Bitcoin's not going to lose 74K. If Bitcoin somehow loses 74K, we get a bigger pullback, which I'm not expecting again. But if we do, then this may not stand. Like, this assumes that the bottom is close on Bitcoin and on these altcoins, okay? So with that assumption in mind, we've had this idea shared a long time ago, a few weeks ago. And we've had this range outlined a while ago as well. And I said in previous videos that until we clear these range highs with conviction, a pullback to the mid-range or to 55 cents, this area is definitely on the table. We need to break these highs and hold these highs and move up to eliminate the chances of us hitting 55 cents. And as you can see, all we did so far was we wicked this local high of this range and we rejected and fell back inside. And so the 55 cent region remained on the table, right? So CRV already came down to 60 cents, right? And so all we're looking for here is we had these built up lower highs that we've taken quite a bit of now, but now we still haven't taken this one here. And we have a marginal higher low here. So what I'm looking for on CRV is the same thing that I said was possible a while back, and that is simply one more leg down below this low here, below these lows here, into this area of demand between 50 to 55 cents. And that is where I think we'll find our bottom on CRV for a full-on reversal. Again, this coincides with Bitcoin making one marginal lower low down, maybe to the next area of interest on Bitcoin. That should coincide with CRV making one more leg down into this area of interest, and then a full-on reversal across the board. That's CRV. Let's go ahead and take a look at Ethereum. Ethereum has been a bit stronger than CRV, a bit stronger than many else lately. We got a little triple tap here. You can actually see it low established, local high established. You can call this a range. Took the lows of the range, came up, made a triple tap, made a higher low here, 1, 2, 3, triple tap, moved up, took the highs, and we have a lower high here, and we have this area of supply here. We're not quite there yet. So this kind of supports the idea of Bitcoin making maybe one more marginal higher high. If it does, Ethereum might hit this area of supply. Bitcoin might make a marginal higher high to new all-time highs, and then we see the correction on Bitcoin, again, because the move up on Bitcoin on lower timeframes is corrective right now, and that could get us the actual correction here on Ethereum. Now, Ethereum, I have this level marked off as monthly demand. Very interesting level here. If we go to the monthly chart, it's very, very clean. And you can see here, beautiful, beautiful monthly candle that preceded this strong monthly move to the upside. So any retests of monthly demand are beautiful buy opportunities, okay? We talked about how we previously front ran this little area of monthly demand down here. And so we front ran that the same way that Bitcoin front ran the 68 to 72K zone that I've talked about in prior videos. So this is the monthly area of demand that is formed. And if this was the bottom, the same way 74K is the bottom in Bitcoin, then any dips into monthly demand are incredible buy opportunities. And so with something like Ethereum, if we get a marginal higher high here along with Bitcoin, we could tag this area of supply. And then we could see a pullback down to these range lows, or we could see a quick wick into monthly demand. And that would be the best buy opportunity for Ethereum before the full-on reversal, right? So again, for Ethereum, a little bit different than the other altcoin charts because we are making local highs here, but we are approaching this area of resistance. And with Bitcoin potentially forming a local top here before a move down 5 to 10%, that would imply that we could come back to take these built up lows into this big gap, this big liquidity void into monthly demand, or we may bounce slightly above monthly demand. You can call this zone here a bullish breaker, not quite really a bullish breaker, but maybe on the higher time frames, but it's an area that we consolidated at before we had this move down, which we reversed from, right? So you can take monthly demand as an area of interest, or you can just take this entire move down before the break to the upside and the shift in market structure as higher time frame demand, right? So essentially at these range lows, right below the range lows, we have a big cluster of demand, right? So maybe a rejection here if Bitcoin is heading straight down, or if Bitcoin makes one more marginal higher high, a slight push up into supply, and then potentially along with Bitcoin, a pullback into monthly demand, or just into the range lows essentially before the full on reversal. This would be ideal, okay? It doesn't mean it has to happen, but what I'm telling you here is that if you did not buy Ethereum under 1500, and if you missed this wick zone, for example, to add to your positions, this would be the next best chance to add somewhere right below $2,000, right below 2100 for Ethereum, okay? So that's Ethereum. Let's go ahead and move on to XRP. So XRP, like CRV, missing ideally one more leg down into right below these lows here at 191, which would give us, again, that triple tap that I've been talking about for probably at this point months now, because we've been consolidating here for so long. XRP, just one of the most beautiful charts from a corrective perspective as well. Again, we had that expanded flat where we made a low, took the highs, right? We literally talked about this earlier in the video, took the highs, then we took the lows. That's an expanded flat or a WXY or one large W. Then we had an X wave or another choppy corrective move. Then we had another corrective move down, right? Took these lows. Then we had another corrective move up. Because again, three-legged structure, 1, 2, 3, right? Three-legged structure. Move up, chop, move up. So corrective move, right? So we expect that to be faded. So what do we have? Corrective move again. So it just continues on. And what's happening here is we're building a larger base or consolidation for the next impulsive move to the upside. The next move, like this one that took us from 50 cents to $3. And there's 6x. We're looking for the next 6x, for example, right? And yes, I do think we're going above $10 and to double digits. So I'm not being unrealistic when I say another 6x, right? I mean, really, I think we're going a lot higher than 10. So I've covered that in other videos. But my point is that all we're seeing here is consolidation before the next leg to the upside. And the longer its consolidation is, the more violent that next leg to the upside will be. And in a perfect world, we get a triple tap here to solidify and complete this base before the rally. This would also give us a very beautiful entry to catch the next leg to the upside, right? In my prior videos, I talked about the best R for longs being the green zone. You can see we literally wicked into that zone and we've had a beautiful bounce and we haven't seen it since. So these levels really do work, guys. And these are levels that I've highlighted way, way in advance, right? A lot of people got really bullish at these highs, looking for continuation. I said a pullback is likely. A lot of people, when we were trading at 290, said there's no way we hit 163, a nearly 50% drop. We did it, right? We bounced from there. And there's still people that think that this is a bearish structure, or there's still people that think that we're going to break down from here and go back down to 50 cents. Not going to happen, in my opinion. This is a very bullish consolidation after what was a 6x move to the upside. And we're hoping that we can get, again, one more smaller leg into this area of demand for a triple tap for a full reversal. It's also possible, I don't think this necessarily is likely unless Bitcoin pulls back a lot deeper, but it's also possible we come back into here and get what we like to call like a 3 drives pattern, meaning 1 drive, 2 drive that takes these lows, and a 3rd drive that takes these lows before reversal. But again, I think that's a little bit less likely with the strength that we're seeing here on XRP today, and with the expectation that Bitcoin may not pull back more than 5 to 10% from current levels. So on XRP on even lower timeframes, what I'd ideally like to see, again, this depends on if Bitcoin's going to make one more marginal higher high or not before pulling back. But if we do get a marginal higher high, XRP can take all these local highs here into this gap and area of supply. So wick into here in a perfect world, and then pull back along with Bitcoin, and ideally down below 191 into this area of demand, which coincides with our range lows for the full on reversal. Okay, so again, you're seeing this kind of commonplace theme where most of these alts would do well to get one more leg down, like CRV, like XRP, Ethereum being stronger than both of these at the moment, but Ethereum also would be very healthy to pull back into that monthly demand at around 2,000, 2,100. Let's talk about another coin. Let's talk about LTC. So LTC is one that I previously longed into weekly demand and that I fumbled, forced to close the long on the last pullback, unfortunately. But I shared a chart of this setup a while back. This is the chart that I shared on LTC some weeks ago, back when we were trading at, I think, around 130. And everyone was really bullish on LTC. And I said, I'm interested in buying it here at essentially 80 or under. And people said that it's impossible. I got some people that called me out and said I was crazy and all kinds of things for suggesting that Litecoin could come back from 130 down to sub 100 and even to $80. And that's exactly what we got. The blue line, obviously, from that chart that I shared, dipped into this area of demand. And we've seen now a reversal. However, we're finding a little bit of resistance here. And again, we know that the correction on Bitcoin is not quite yet complete, ideally. And what I'm seeing here on LTC is I'm seeing a buildup of unswept local higher lows here and local area of demand here at range lows. This looks like a nice new range formed with a key swing high, key swing low, deviation below the range lows that we were expecting. And so a retest of the range lows for, again, a triple tap would not be surprising. And that would be, again, a good entry opportunity. So revisit of the $80 region on LTC would line up perfectly with a clean little base here formed. Again, one more leg lower, just like we're looking at for CRV, just like we're looking at for XRP, just like we're looking at for Bitcoin. One small leg lower here to take these lows into an area of demand at range lows for a fall and reversal to 179 plus. That's a beautiful 100+% move that we're eyeing up, right? And so LTC looks fantastic, just like the others. One more small move down, ideally. Let's go ahead and move on to CVX. CVX is another one that I'm a big fan of. I do hold quite a bit of it. And again, it's another one that I covered in not my last YouTube video, but the video before that. And in that video, again, we have the green squiggle. This is the area of interest that I marked off in orange here. And again, this is the ideal place to be buying CVX. In fact, it lines up really nicely with this range here that we have because it is the mid level of the range as well. And the mid range often acts as support on a bullish retest for any coin. So you can see here that we hit the range lows, we took the range highs, we pulled back. Again, CVX, just like every other alt that I've talked about, ideally could go for one more small leg down into this area of demand at the mid-range before fall and reversal. So CVX also beautiful buy opportunity coming for those who have not had a chance to add or want to add more to their positions. This is the place to do it. If you have no exposure to these coins, guys, by the way, and you're a spot buyer, I always say don't always go all in or all out, meaning if you have zero exposure, you don't really need to worry about getting the pico bottom of this move, which would be 12% lower. On Bitcoin at 74K and on Ethereum at 1,500-ish, both Bitcoin and Ethereum front ran the ideal buy zones on the last big move down. And you can see here on Bitcoin, that ideal buy zone was 66 to 74K, okay, with invalidation here at 58. And we came down to 74.4K and just missed this zone by $1,000. Ethereum, same thing. The ideal buy zone was at 1150 to 1360. We came down to 1389 and fully reversed. So for those who have no exposure to these coins, when I talk about these buy zones are ideal zones to add for those who already have positions established or those who want to take a trade with a tight validation. If you don't have any positions established on these coins, you don't necessarily need to wait for the exact bottom that may never come, right? I think these moves down, like on CRV and CVX, are quite likely because of my context that I've talked to you guys about with Bitcoin, looking like it may come a little lower. But you don't need to wait for the absolute bottom that may never come to start a position. This should be where you add to positions that you've already started, right? You should have at some point some exposure. If you agree with me and you believe and you've done your research, and again, do your own research. This is not financial advice. Don't buy CVX blindly because I'm talking about it in this video. Do some research on the protocol, understand why you'd be interested in buying it. And if you've decided that you want to buy it, this is the area where I believe personally it makes sense to do so. But again, if you are like me, you think CVX is headed to new all-time highs, and again, even if it doesn't hit new all-time highs, the first major target is $15 to $40. All-time highs are at 63, and we're at 271. I mean, if you have zero exposure right now and you're itching to get exposure and you're waiting for this zone here at 2 to 230 and we're at 270, there's really no point to be waiting to start a position. You should be dollar cost averaging in, because a 20-30 cent difference isn't going to matter if we're headed to 15 to 40 bucks or even to 60 plus, which is what I think is going to happen. And you don't want to miss buying at $2.70 because you were waiting for $2.40 if you believe we're headed to 20, 40, or $60 plus, right? If we're looking at a 20 to 40x here, you don't want to be pinching pennies at these levels trying to nail the exact bottom, okay? If you already have a solid position established and you're looking for where to deploy the last of your deployable funds that you want to deploy, then you're waiting for these ideal entries, because even if we don't get them, you have plenty of exposure to the upside to where it doesn't matter if they don't actually get met. So that's what I want to emphasize here for those who are looking to add to spot positions. But this is CVX. Let's take a quick look at Fartcoin, because this is one that I tweeted recently about and one that I'm looking to take a trade on. I'm not necessarily looking to buy spot for this because it's a coin that I don't necessarily believe will have fundamental value, but I do think that it can go higher for now at the right level. So I am looking to open a potential trade on here. And let me talk quickly about that and why I'm looking to open and where I'm looking to open. So this is Fartcoin, and the reason I'm interested in this one is because I do think it may deliver a good risk reward trade opportunity for a move to new all-time highs before a much larger move to the downside. So Fartcoin already had a pretty significant drop from its highs at 272. It came down to 19 cents. And we created a very nice 5-wave move to the upside off of the lows. And if I take this off a log scale, it looks even cleaner. 1, 2, 3, 4, 5. Sometimes the log scale can change your perspective, and sometimes going off a log scale when you have these very large moves helps you make more sense of the clean 5-wave structure. It's easier to identify. So you can see your very clean 5-wave structure. Very nice, long drawn bleed out, some sort of complex correction, right? Obviously very complex because we just kept making choppy, grinding moves down. And then this move up again, this is not what I consider an impulsive move. And that's why I have us moving up potentially, but then rejecting. Why? Because the move off the lows isn't impulsive, right? So you can see here, we moved up, came down, moved up, came down, move up, overlap, right? Overlap right here. Lots of choppy overlap. This isn't a clean impulsive move. And so again, while a lot of people are aiming for the prior all-time highs, so am I. I just think that we may reject there and then come back down. And essentially what that would be is a giant range being formed here, okay? When I say this in terms of Elliott wave, people kind of think I'm crazy. We'll make new highs. Why would we come back down? When I put it in perspective of a large range, a large consolidation here, after a 15,000% rise or 155x, if I tell you that we're just going to go sideways for a bit longer after 155x before maybe the next leg, all of a sudden it looks a lot more reasonable, right? What if this is just a giant range, okay? Which I think it is because of the way that we moved up correctively off of these lows. And if this is just a giant range, then taking the range highs, then taking the range lows is normal, right? But when I talk about this in Elliott perspective and I say, well, we're making a WXY complex correction, people are like, you're crazy. You don't know what you're talking about. But if I show you guys in a range format, all of a sudden it's more acceptable, right? So in any case, this is an area of demand consolidation here before we move to the upside. And now what we've done essentially is we've put in a series of untapped lower highs into this area of demand. So ideally, we correct here along with Bitcoin. And Fartcoin's unique in the sense that it's not like the other coins where I'm looking for one small leg down. Because if we only get one small leg down, then we would find support in this green zone here at around $1 and then reverse. And that's possible too. I'm not saying it's not, okay? But I'm not interested in a long at $1. I'm interested in a long at this major higher time frame area if we get it. Because I think that if we get this zone here with the context of where Bitcoin is and where the rest of the market is, I'm thinking if we manage to get down to here in a very bullish market environment, which I think is what we have, it would be hard for me to envision us falling through and going even lower when the entire market is rising. I think that something like Fartcoin would continue to rise with the rest of the market, would make new highs while everything pumps. But then because we know that this is a corrective move and it's a ranging move, I think I would take profits at these highs and then look for the move down after. But what I'm looking for ideally here is a move into this higher time frame zone. Maybe we form a nice triple tap, again, a nice spacing structure, and then we go for the all-time highs. And that would be a move from about 60 cents to 280, which is like a 4x, a 400% move. With the meme coins too, they move up so aggressively when they do move up that this sort of a 400x can happen quite quickly. And it's very rare that you're going to get opportunities where you get a 400x within a very short time frame like we may see here if we get this sort of structure, or if we get a test of this area here. And for those who think that this is ridiculous or impossible or it doesn't make any sense, a reminder of what WIF did, because it's essentially the same concept. Nice 5-wave impulsive move, came down, 77% drawdown, came back up, just barely missed the highs. Ideally, we would have taken the highs, and I was talking about this at the time, but we barely missed the highs. And then what do? We came all the way back down to take these lows again. So for those that think that this drawn out move that we got here was the end, everyone was cheering for new all-time highs and a move to $10. And I said, well, this is a corrective move. It's not impulsive, right? We have a lot of choppy overlap here. We don't have 5 waves. We have 1, 2, 3 waves, right? Corrective. And so I was looking for a move down to sub $1. I got a lot of hate for that. And we ended up hitting 32 cents, which, by the way, I then said was a high time frame accumulation zone in a place where I'd actually consider blind bidding with if I was bullish on it fundamentally, right? So we hit that zone, now we reversed. But this is essentially for Fartcoin. I think we're somewhere about here, where I think we're going to head for new all-time highs, and then I think we're going to bleed back down like what we've seen here on WIF. So there's precedent for that type of move. Of course there is, but for those who don't believe so, this is just the perfect example, because there was so much disbelief that WIF could go back under $1 when it's trading here at 5 for the second time, and that's exactly what we did. So again, WIF, another one that I'm just looking for a slight move down here on WIF. Like the rest, we have a little local range here. We have a lot of supply, which is what I've denoted with the red lines here. You can see we're rejecting against them. We have relatively equal lows here, and we have an area of demand. So for WIF as well, just looking for a test of this, and then ideally reversal off of this for continuation up, right? HBAR, I get a lot of questions on HBAR, and frankly, guys, it's one of the coins that really is just in accumulation right now. There's not much going on. From prior videos, I've talked about how on the HBAR Bitcoin pairing, it doesn't matter to me where HBAR USD is. When HBAR BTC gets back to this green zone, which I think is quite likely, at that point, I think we need to get ready for a massive move up on HBAR, and that's where I'm going to be more interested in HBAR USD for looking for trades. We are about 36% above that right now, so that's why I haven't been updating HBAR, because there isn't much to update until we get to this green zone. When we get there, you'll definitely see more updates from me on it, because then it's time to start paying attention. But as long as we are not there yet, there's odds are, in my opinion, that we probably bleed lower. On the Bitcoin pairing, what does that translate to on the USD pairing? Probably a retest again of this orange zone. For those of you who recall from a few videos ago, I talked about why this orange zone is so significant. It's a very high time frame area of demand, just like we talked about on other coins. And I do think that we will bottom here in the orange zone. And I think that that's what we're doing, is we're forming some sort of a bottom here before the next major leg to the upside. HBAR as well went from 4 cents to 40 cents. It did a 10x off of these lows. So what we're seeing now is just consolidation, correction before the next move to new all-time highs, and I think to $2 plus, as I've been saying for a very long time now. So all we need to do with HBAR is be patient, and in a perfect world, we have this local low here, and in a perfect world, we come below it, deviate below into orange, and then either make like a triple tap here and then reverse, or just full on reverse from there. But I do think that the odds of us seeing sub 12 cents one more time are quite likely, with the weakness that we're expecting on the HBAR Bitcoin pairing, and the idea again that Bitcoin is likely to make one more leg down. I think there's a decent chance we will get into the orange zone one more time before a full-on reversal to the upside. So you just got to be patient with HBAR, guys. I think that about covers it, guys, for this video. We've covered Bitcoin extensively on the lower time frames. In terms of Elliott wave, we've covered altcoins as well. That's going to do it, guys. Again, if you enjoyed this video, as always, please like, share, and subscribe. Let me know in the comments what you thought of this type of video, and I'll catch you guys in the next one.